Hello everyone, I'm John with JP Strategic Investments, and today I'm going to go over Patriot One Technologies' second quarter earnings report that was just released yesterday, and I think the results were better than most investors realize. I'll go over all of the results in detail and give my analysis of what it means for Patriot One Technologies stock going forward. As always, if you find videos like this helpful, don't forget to hit like and subscribe, and with that said, let's dive right in. So, in case you guys are wondering where I'm getting all of this information, it all comes from Patriot One's MD&A, or Management's Discussion and Analysis. Because Patriot One doesn't hold earnings calls with analysts, the MD&A is the best document for Patriot One investors to get the full picture in relation to Patriot One's earnings. As I said before, I'm going to go over all of this in detail, but I figured I'd put a link in the description of the MD&A just in case you want to go and check anything out for yourselves. So, getting into the report, we see that Patriot One Technologies had a comprehensive loss for the quarter of $3.1 million. And I know my viewers on this stock are kind of split between the US and Canada, so I just want to remind everybody that these earnings are reported in Canadian dollars. It doesn't really matter much since we're comparing quarters to quarters here, but I just want to make sure everybody is on the same page. So, a loss of $3.1 million represents an improvement of 49% year over year and 6% quarter over quarter. Now, this loss is reported net of COVID relief funding, which in this case was $500,000, so the loss would have actually been roughly $3.6 million if not for the COVID relief funding. Now, that being said, while this does skew the year-over-year improvement, it actually makes the quarter-over-quarter improvement seem less impressive, because in the previous quarter they received $1.38 million in COVID relief funding. If you account for the fact that in the second quarter they only received $500,000 in COVID relief funding compared to the $1.3 million in the first quarter, and then adjust for the differences in other funding, net loss actually improved by just over $800,000 or about 24% quarter over quarter. This improvement quarter over quarter is very impressive in my opinion, and it shows a huge improvement in cash burn and efficiency. If we take a look at their revenue, it was down significantly year over year and quarter over quarter, and management notes that this revenue was entirely comprised of revenue from extract and that the decrease was mainly due to timing of larger contracts. Although if we look a little further, there's actually a note at the bottom of this section that shows that deferred revenue increased by almost $200,000 and that this revenue is exclusively relating to the sale of PAT scan offerings. This is pretty exciting because it likely means that PAT scan sales are actually beginning. Deferred revenue, for any of you that didn't already know, usually refers to revenue that has been received for a good that has not been delivered or for a service that has not yet been performed. This increase in deferred revenue is likely from customers that have either purchased PAT scan products or put down a deposit, but Patriot One has not yet installed the products. In this case, the payments are designated as deferred revenue, and once Patriot One delivers the products to the actual customer, they can then recognize the payments as actual revenue. This is a good sign that Patriot One's sales team is ramping up and backs up what Peter Evans alluded to in the live webinar last month. Next up, sales and marketing costs were down 66% year over year and 12% quarter over quarter. The year over year decrease was mainly due to cancellations of travel and marketing events as a result of COVID, although the quarter over quarter decrease seems to be mostly a result of strategic cost cutting. The next section in the MD&A is research and development. Now this section is always a little weird because of the different grants and fundings, but basically if we adjust for all of that, research and development costs increased only by about 3% to $1.7 million. Next up is general and administrative costs, which decreased by 30% year over year and 41% quarter over quarter. And even after accounting for the COVID relief funding in this section, there was still roughly a 22% decrease in expenses, which is further evidence of management's improvements in efficiency. Next up we have personnel costs, which did improve year over year but were roughly unchanged quarter over quarter after accounting for COVID relief funding. And lastly we have professional fees, which management was able to reduce by 47% year over year and 44% quarter over quarter. The only other section here that I want to touch on before I give my final analysis is the unrealized loss on investments. The main worry here for investors is that the SoTech deal doesn't go through. And the worst case scenario is that Patriot One has to write off the entire investment as a loss, which would be about $3.8 million. Now, management seems confident that the deal will go through, but the deadline has already been extended once. Personally, I'm not familiar enough with the actual details of the negotiations to make any educated predictions, but I will say one thing. This earnings report was Peter Evans and the new management team's last chance to write off any negatives like this and have most of the blame fall on their predecessors. The fact that Peter and management have stuck with this now means that they take at least some of the responsibility if the deal ends up falling through. I don't think any of them would have made that decision without knowing exactly what they were doing. So now that we've gone through all of that, what does this mean for the company and the stock? Well, personally, I think this report was actually much better than I expected. Patriot One was essentially able to reduce their net loss by 24% compared to just the last quarter, and they easily have enough cash to sustain them for the near future. Not only that, but we got almost $200,000 in deferred revenue relating to PAT scan sales, hinting that sales could be getting off to a nice start. Personally, I'm excited for the next quarter, and I hope Peter gives us a good update in his shareholder letter in April. I hope you guys found this analysis helpful, and if you did, please consider liking and subscribing. Also, don't forget to leave your thoughts and questions on Patriot One's earnings in the comments below. And other than that, see you next time and have a great day.